I'm Mr. Simons, and in this video we're going to look at the RBA's monetary policy decision for August, which came out this week. This week being, when was the decision made? The decision was made on the 6th of August, but I thought it would be really valuable to go through the statement, have a look at what was said, and see what the next movements might be like in terms of the cash rate and then the general level of interest rates in the economy. So here we are with the statement. You can see statement by Philip Lowe, Governor, Monetary Policy Decision, and you can see it's the 6th of August 2019. Obviously the headline message here, the board decided to leave the cash rate unchanged at 1%. That was after two consecutive 25 basis point cuts in June and then July. What you can see here in terms of looking at the world economy, that's what this first paragraph is looking at. Can you see it says the outlook for the global economy remains reasonable? So the growth prospects are okay, but not amazing in terms of the global economy. Let's go further here. It says, however, the increased uncertainty generated by the trade and technology disputes. Now, trade and technology disputes, that's where you should look at that trade war, that trade conflict between the US and China. That's what the RBA is talking about here. And what it says is that this conflict is affecting investment and means that the risks to the global economy remain tilted to the downside. Now, this is such a great economist expression for something to be tilted to the downside. Essentially what it means is the risks are that global growth will go lower, that the risks are pointed to things getting worse rather than getting better. Getting worse, they're tilted to the downside. Getting better, they would be tilted to the upside. You can see here in most advanced economies, so this is the global economic picture, unemployment rates are low, wages growth has picked up, inflation is low. Okay, so we're seeing a bit of a snapshot of how the RBA is seeing the global economy and that risk factor of that trade and technology war between the US and China. So if we move down to the next paragraph, you can see here that the persistent downside risks, so persistent, ongoing downside risk, things could get worse. They could go downhill rather than, well, improving and going uphill, right? So what it says is the persistent downside risks to the global economy combined with subdued inflation, so subdued, weak, sluggish, not rising, subdued inflation have led a number of central banks to reduce interest rates this year, and further monetary easing is widely expected. So what we're saying here, well, what we're seeing here is that the RBA is saying that with the weak global growth, with low inflation, a number of central banks have reduced the cash rate. They have moved to reduce interest rates, and that further monetary easing is widely expected. So further expansionary monetary policy is expected around the world. This would be a good fact to discuss in some of your answers in terms of looking ahead, is that something that could support global growth is that further monetary easing is expected in economies around the world, and this is according to the Reserve Bank of Australia. Okay, so what we've got here is the RBA now looking at the economic outlook for Australia. So it's had a good look at what's been happening globally. Now it's turning its attention domestically, so within Australia. What we can see here is that the RBA is saying economic growth in Australia over the first half of 2020 has been lower than expected, right? And one of the reasons is that household consumption is weighed down. So household consumption is lower than expected. If something is weighed down, it's like it's got a weight on top of it. So it's making it sink lower than it ordinarily would have been. So we can see here that household consumption is weighed down by a protracted period, so a long period of low income growth and declining house prices. And remember that consumption is so important because it makes up around 60% of GDP. So here it's saying that Australia's economic growth has been slower because of low income growth, and declining house prices. This is so important. If you get a question that's looking at Australia's recent economic growth, you can point to what the RBA is saying are the reasons for Australia's recent weak economic growth. Looking forward, the RBA is optimistic about economic growth, thinks it will be higher. You can see here the RBA is saying is that the central scenario, so the sort of main idea, the main forecast, is for the Australian economy to grow by around 2.5% over 2019 and 2.75% over 2020. So okay, economic growth. The outlook is being supported by the low level of interest rates, recent tax cuts, that's in the 2019-20 budget, ongoing spending on infrastructure, brighter outlook for the resources sector. So if you're talking about what's going to happen to the Australian economy, here are some factors that are creating positive growth into the future. Going a bit deeper now into the Australian economy, the RBA says that employment has grown strongly over recent years and labour force participation is at a record high. So more and more people are seeking work in the current environment. What the RBA says, though, is there has, however, been little inroad. If I make inroad, think about it. They say I had like a whole bit of land that no one had traveled. If I make inroads into it, I make progress through it. So what it's saying is there has been little inroad, little progress into reducing spare capacity in the labour market. And as a result, the unemployment rate has risen slightly. So it makes sense here because if more people seek work, then there are more people actively seeking jobs, which means there's more or a higher number of people who are classified as unemployed, which will push up the unemployment rate, even though more people haven't lost their jobs. Instead, it's more of a story of more people seeking work. RBA thinks that wages growth remains subdued, weak, and there's little upward pressure at present, right? There's little pressure pushing wages higher because if companies need extra workers, there's all these spare workers they can go and get. They don't have to offer higher wages, which would push up those wage levels. Okay, and then we come to the concluding part of the statement here, and you can see that the RBA is saying it is reasonable to expect. This is like, you should expect this. It is reasonable to expect that an extended period, a longer period of low interest rates will be required in Australia. So if you're looking at the outlook for monetary policy in 2019 and probably 2020, that it is very likely that interest rates will remain low. And the reason they'll remain low is, here we go, what a great quote to include: to make progress in reducing unemployment and achieve more assured progress towards the inflation target, right? So the RBA is saying, you got to expect that rates are going to stay low so that we can reduce unemployment further, reduce that spare capacity, and also keep trying to push inflation back up into that target band. Because remember, it's been under that target band for some time. The exact duration fails me. I'll put it in the description so you'll have it there. But just expect, everybody, the RBA is saying, interest rates will remain low. So where do we go from here? Well, we know that the outlook for monetary policy is that it will remain expansionary for some time to try and reduce unemployment, to try and boost inflation up a bit further. In terms of what the RBA might do in September, not sure. Many economists are expecting another rate cut in Australia this year, but given America has cut its rates and other things are happening, we'll just have to wait and see a little bit closer to September what might happen. Anyway, questions in the comments. I'll put a link to the statement in the description. And as always, thanks for watching.